Hey everyone, it's Friday morning, November 8th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, and let's dive right into yesterday's market news. Before we dive in, a quick reminder, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For personalized investment solutions and high-quality mutual funds, visit amf-capital.de. So here's the scoop. We saw a tech-driven rally that lifted both the Standard & Poor's 500 and the Nasdaq Composite to new record highs yesterday. This comes on the heels of a fresh interest rate cut from the Federal Reserve and the confirmation of Donald Trump's re-election. Let's break it down. Starting with the Fed, they made a widely anticipated move, slicing interest rates by 25 basis points. That brings the benchmark rate into a range of 4.5% to 4.75%. Investors seem pretty happy with the decision, and the Standard & Poor's 500 rose about 0.7%, while the Nasdaq really took off, jumping nearly 1.5%. Big names like Nvidia and Amazon hit new highs, leading the charge in tech. Meanwhile, the Dow hovered right around flat, catching its breath after a massive 1,500-point surge the day before, marking its best day since back in 2022. Over in the bond market, the 10-year Treasury yield cooled off a bit, down around 8 basis points to 4.34%. And it looks like investor confidence is still riding high from Trump's election victory. The market seems to be banking on his pro-business stance, with his plans for corporate tax cuts and deregulation fueling optimism for economic growth that could translate into strong market gains. Fed Chair Jerome Powell took some tough questions yesterday about the Fed's path now that Trump is back in office. Powell kept it cool, saying the election won't influence near-term policy decisions, and when asked if he'd step down as chair if Trump requested it, Powell had a simple response: no. So that's the quick update for this morning. We'll see how the markets respond as the week wraps up, and I'll catch you tomorrow with all the latest. Thanks for tuning in to Capital Markets Quickie.